Good morning. Today's Saturday, but I will be doing my trade review for yesterday, the 9th of June 2023. I'm going to start on my daily chart, and we can see from here we had a couple of days of gap up and some consolidation this week, and then before market we gapped up. And actually we gapped up, and my main area of watch was the 432 area, which I wanted to watch for a rejection, and I was waiting for a break and retest of the top of this area, which would be in the 429.80 area. The reason I'm using this area, this area is drawn in because it goes back to August 2022, where we had a pivot and a rejection area. So this has been on watch for some time. And it's a good rejection area because there'll be a lot of people, millions of people watching the exact same area. So at that area I'll be expecting, or I was expecting, some good movement. And then let's just review this supply zone further and the reason I drew it in as I did. So going back to this wick here, when I draw my zones I usually use the top of the wick and the body of the wick. But that would have given us quite a big area, and it's too much of an area for me to get in with my start of entry, where I normally get in at the start of the zone, get in at the top of the zone, and then take some between that. So I needed to narrow that zone down, and how I narrowed it down was by going back further and looking at where bodies and tops and bottoms candles converge with each other. So looking for areas of convolution, and it worked out. It was just exactly that wick area. So as you can see, on the daily, we got these two topping tails, which is the bottom of that zone. We got this area here where the top of that candle and the bottom body of that candle, and you can see a nice area here, a nice area here, and if we go back further you'll probably see other areas of convolution as well. And so when I draw my zones in, that's what I'm looking for. I'm looking for areas what intersect the bottoms and tops of pivots and candles. So you can see this nice area here, and we've got that candle there, all within that zone, the bottom of that candle. We talked about those. So that's kind of what I'm looking for, and that's how I draw my zones. But if the zone is quite big, then I would be looking for some support and resistance within that zone. And so for that I'd go down to the 60-minute. And you can see on the 60 we touched this area, we touched it again on Thursday. And on my pre-market plan I said about excuse me, I said that we were watching it come up, come down into this area here, into that area there, back up to that bottom of the zone I drew in, back down here. But what made it stand out was that it went back up into that zone, but it didn't come back down. In fact, it came back down about a third. And I'm pretty sure, I know it is because I've already seen it, it happens to be on the Fibonacci major area as well. So take that bottom candle, that top candle, and if you see yesterday it broke out, it came back down to that area. So that's why I was watching that area, but it also coincides with the bottom of the zone. How uncanny is it that the fibs and the zones and the pivots and the convolution, they kind of all merge into well-known areas of resistance and support, or supply and demand, which makes it a lot easier. Anyway, so let's go into my trade. So for that I'll be going down into the 2-minute chart and the 5-minute chart. So looking at the 5-minute chart, off on the open, I wanted to catch a break and retest long off the open, and it did happen. You can't really see it in the 5-minute, so if we see it in the 2-minute, so we had the open on this candle, high volume. I don't generally like playing the first 5 minutes of the open because I just don't like it. It's too fast moving. So what I was waiting for was a bigger pullback. So what I wanted to do, excuse me, I wanted it to break out and come back down, probably after about 5 minutes or so. And I'll be honest with you, I didn't think that was a big enough pullback, but the idea was right because it did pull back, hit that area. I was really wanting to catch it at this area, so I wasn't really watching for that move, but I could have maybe got in with a starter. But anyway, I watched it go up all day. In my old days, or when I can't control my emotions, I would have probably got a bit despondent because I missed this area, and I would have started trying to catch a falling knife, so short in there, 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 and I would have been exhausted and I would have been tired and I would have been well and truly stopped out several times, and I probably would have given up thinking, oh, it's taking me out again. I would have walked away and just watched it work. But what I'm trying to do is be more patient, and I'm trying to analyse the volume as well, which I'm finding very, very helpful. And so I'll go into the trade I took. So I was watching for the top of this zone, but also I had 432 in mind, which is that area there. And I didn't want to go in full size, and I was waiting for it to break the zone, knowing that I had 432 in mind. So I took my first starter entry on the top of the zone as it broke it. And I know it's a big resistance area because of what we just discussed, going back to August last year. And so I was willing to risk about 20-30 cents above 432 as my stop. So this would have been my stop area. So my first entry I was in, and I was waiting either for rejection back down, or I was waiting for it to come back up. So I'm in with a start position. At one point I was in profit. I added another position just there. I must have been about 431.85, 90, close to 90 I think it was. So I was in with 2 positions out of the 4 I wanted. And then I was in good profit at that point, and I wanted to use this area, which is a neckline area of, I wouldn't have known that was coming up yet, so but I wanted to use that area as my first out. So I waited, it pulled back up, and then I was watching the volume. So as you can see, the volume was increasing as we were coming down, so it looked like it was going to break down, so hence why I was holding it a bit longer. And then we had full volume, and it reversed, and then I saw this big candle here. Doesn't quite line up, but yeah, the volume was generally, I was watching in front of the candle, and I saw that big candle which is above the average area for volume, and so I took, let's clear that, and so I took 2 more contracts just on that candle there. So my average position was about here. My stop was about here, 432.20, so I was giving myself about 30 cents roughly of risk. So then it broke down, and it broke this neckline, and I took my first out there, and I waited. I saw this setting up, and you know, I think, oh, maybe it's a GBI. It's trapped between the 8 and the 20. But I waited. I didn't want to take any more because my target was the VWAP, and then I was targeting my original area of support of the break and retest area. So that was my main target. That was my first target, and I probably would have taken one there. So I was out one contract here. I got out another contract on the VWAP, and then I saw this bottom tail, and I thought it looked like it's going to reverse. So where are we there? I saw high volume as well, this volume bar around here. And then I panic sold, so I got rid of one there, and I got rid of one up here. So all around the VWAP. So I got out of my first target, out of everything. And then I was watching the volume. We had higher volume there. A smaller candle, but still higher volume, still high volume for the size of the candle. And so I saw the pullback. And it just goes to show, if you're leaving a runner, my average position was here, and all I need to do is leave one runner, and I struggle with that. Not sure why. That's one side of my trading I need to fix, because it came down quite nicely, and I was having a bit of FOMO at this point, thinking, damn, why did I not leave my 2 trades? I had 2 left and I wanted to hit this target around here. And then I sort of pulled back, my FOMO went, and I was happy, and not once did it ever break this neckline area or come close, and it would never ever break my break-even point as well. So it just goes to show leaving a runner is quite important, because if you look what happened. So that runner would have made me more. So that runner from up here would have made more profit down here than all 3 of the contracts I got out of along here. So, you know, runners are probably your money makers, and your original contracts are just your testing of the market. So next week I want to be stricter with my runners, and maybe it's down to my sizing, because I only got 4 contracts on this. A quarter of my position as a runner seems like too much for me, and I think that's why I panicked sell. I did it on Thursday as well, and again, didn't need to, and I could have made extra money. I probably should back test all my runners and find out the ones I got out because I panicked versus the ones which I should have left to the end of the day, or to my actual target areas I come up with, and see how much in the green I would have been when I'm not. But that's a job for a weekend when I'm not busy. I'm off today. I'm away. I'm going hiking up in Chippenham, so I thought I just want to do this quick video before I leave. Hopefully everyone had a good trading day, and I'll see you on Monday. Thanks for watching.